fascinating report that you put out. $8 billion is the price tag you think if we're going to have as much of an efficient infrastructure in terms of powering your electric vehicle as you can filling up with gas.
Yeah, I mean, that's the high end of our range. We provided a range of $2 to $8 billion. I mean, it really is going to depend because obviously you have home charging in an EV vehicle. So in the low end of the range of about $2 billion, it's about 30 minutes for the maximum person travel to a charging station for a supercharging station. And then in the extreme scenario, it's about 4 minutes, which would match the convenience of a gas station.
I see. And in terms, though, put it in perspective overall, Colin, of the amount that you see coming in terms of capital investment from Tesla as a whole, because is 2 to 8 billion a significant amount or just a drop in a rather large pool?
Quite frankly, it is a drop in a large pool. I mean, that's because that 2 to 8 billion will probably occur over many years. But it is definitely something that we don't think investors were focusing on or looking at. I mean, I think people are focused on the Model 3 launch and all the CapEx that's going to be involved in that. What we're really highlighting in our report is that once that Model 3 gets out, you're going to have to add that infrastructure. You're going to need more convenience for consumers in terms of those that want to go longer drives. And you're going to need to expand your servicing network. And all of that's going to mean higher CapEx, continued high levels of CapEx. So we remain very cautious, and cash burn remains a top concern for us.
Let's get to David and his point of view, because I know you view really Elon Musk and Tesla as a positive force within the US economy. And indeed, are we likely to see this sort of investment coming to a good end?
Well, I think it certainly helps all of us that anybody's making these investments. Colin obviously is immersed in the numbers way more than me, so far be it from me to say that, these are absolutely brilliant moves for Tesla. But I would say, he's also predicting his targets would be for the stock to drop by a third, which is a lot. And in a way, you could counter his argument by, and forgive me, Colin, but with in your view, overvalued stock, at least they have the ability to raise more capital with that currency that could help them pay for these investments. And I think they are certainly unqualifiedly positive for the country.
Colin would respond to us for that in terms of the price targets you have out on Tesla and the concern you have in terms of the overvaluation of the company. How much do you actually think there's been a support to the share price by the relationship we've seen being built between Washington and Elon Musk?
I mean, I think that might explain some of the recent run in the stock. I mean, I don't think there was any real fundamental reason post-election for the run. I still, believe that. When I look at valuation here, I mean, very cautious. I'm forecasting a pretty significant decline. But you got to realize this is a company that burned about $1 billion in the fourth quarter. Probably is going to burn about $2.5 billion in the first half of the year. Needs to raise capital. I think they said in the last quarter because they're going to get very close to that cushion. So I think, at what point, will the market still be willing to issue capital to them if they continue to burn through cash?
David, it's been fascinating to watch the tightrope that Elon Musk has walked when it comes to balancing his investors' needs, the public's needs and desirability of his own products, and still keeping what is an ever closer relationship with Donald Trump.
Well, there's a lot of things that are amazing and quite fascinating about Elon Musk. I mean, the company almost went under, then was, of course, more or less saved by the U.S. government. And then, the sentiment towards what they do in terms of electric vehicles, having such a pro-environmental mindset has certainly just assisted them, from a zeitgeist point. The way the public thinks about these issues has tremendously benefited them. I think it's one of the more encouraging things about the Trump administration that people like Elon Musk are at least somewhat able to whisper in the ear of the president. We need people with his faith in tech, his faith in the need for real contemporary infrastructure, not just bridges and airports, but we need more digital infrastructure. And I'd say the things that Colin's talking about, EV charging stations, is exactly the kind of infrastructure this country needs.
Colin, give us the catalyst, if you will, for the price target you have on $160. What do you think sparks the sudden sell-off? Because it is a volatile stock.
Yeah, I mean, I think I look at it as I go into the near term. We're very concerned about cash burn, as I mentioned before. I think there's definitely risks to the Model 3 delivery target, which is very aggressive. And I think the one thing a lot of bulls aren't focused on is what will the profitability be of the Model 3 when it launches. And I think, there's a big risk. It's the economics that are very, very challenging. So that's what we remain concerned about in the near term. Long term, you have to realize there's a lot of competition coming. BMW, Mercedes, Porsche, Audi, all in the 2019 timeframe are going to be launching EVs. so competition is going to intensify. Our survey work has indicated that a lot of consumers would consider those brands very highly if they launch an EV. So we'll see how it plays out, but I think it's getting very tough.